I think that's what we're meant to be here to do, is to kind of help each other and collaborate. And I think it's really difficult, especially in the real estate game, to get anywhere by yourself. So to those people that don't want a partner, I would push back a little bit, that they do have a partner. They've got a lending partner. They're going to have a property management partner. They're going to have partners all throughout the real estate business. And so why not grab the best of the best? And it takes a long time to vet them, that's for sure. But why not grab the best of the best, take those skills that you've got, and instead of focusing on things that you're not as good at, bring in those people that you are so that you can scale.
But let's talk about kind of where, like before, what were you up to before partnering with Derek and launching this Build to Rent community fund? Tell us a little bit about your background and how joint ventures specifically have helped you grow and scale.
Yeah, man. So I started way back as a commercial broker, and I realized really quickly that it was going to be impossible for me to scale that business without some partnerships. So I started investing in real estate, and as recent as last 2 years, we were probably sponsoring deals in California. California is a little bit unpredictable, so we started taking some investors to other markets across the country, and that's kind of how I connected with you. And really wanted to try and figure out a way to bring our 20 years of experience and kind of all the lessons that we've learned, and see if we can kind of help grow together. There's so many facets of real estate, Ellis, as you know, that it's impossible to do it on your own. So when you can kind of, pick a jockey like Derek and just ride as far as we can, that's cool. So that was that's kind of the short version of it. There's a lot of in betweens, which we'll get into a little bit later, I'm sure.
So Andy, I do want to ask you this. That's really interesting. You brought that point up. Like your method, I've heard you say this is kind of like you're all in on, like you're good at raising the money. Like this is kind of your role you play in the last several deals, and it's all about like you finding good jockeys. Explain why that's important. What do you mean by that? And also when you talk about like, are you not afraid of partner? Like most people, when they think of partnerships, like, no, like I don't want to do partnerships. Like people get, two things that, death or divorce, right? You know what I'm saying? Like all partnerships end in death or divorce. And so explain to me your mindset of why you actually have decided, no, I want to go all in on partnering. Like this is actually how we're going to build our entire model. How I'm going to provide for my family is through joint ventures. Explain that mindset.
Yeah, man. One, I think that's what we're meant to be here to do, is to kind of help each other and collaborate. And I think it's really difficult, especially in the real estate game, to get anywhere by yourself. So to those people that don't want a partner, I would push back a little bit, that they do have a partner. They've got a lending partner. They're going to have a property management partner. They're going to have partners all throughout the real estate business. And so why not grab the best of the best? And it takes a long time to vet them, that's for sure. But why not grab the best of the best, take those skills that you've got, and instead of focusing on things that you're not as good at, bring in those people that you are so that you can scale faster. Ellis, I've been on so many calls with operators as we just kind of figure out who are those jockeys or funds that we want to invest in. And I'm always amazed at guys, even 3,000-4,000 units, they don't have all of the pieces together because it's not possible. They're not focusing on the investor relations part. They may be great at the acquisition, the execution, the disposition, but like the cruise along the way, it sucks, right?
Yeah.
So we want to be that for people. We want to be that kind of investor relations, back office, asset management, kind of be able to kind of help other good operators stay in their lane and do what they do best. And that's kind of what we're
So, and let me ask you this, just for context for everyone else, because you know a lot of people in our space, and most people listening here probably are seeing and knowing a lot of the names that we know in our space. Out of the people you chat with, how many people are using joint venture structures like the one we just showed to grow and scale their portfolio?
I mean, I would say that if they're doing it well, it's 7. And part of that is I'm in kind of a community oriented mindset.
Well, I mean, I'm sorry, like percentage wise, like how many of the people you chat with or are actually doing it this way?
Yeah. So when I
50%?
say 7 out of 10, so
7 out of 10,
70%.
70% of people.
Yep.
Yeah. Last question, Derek, and then I want our Andy, and then I want to talk Derek real quick too, and then bring you guys in together. Talk about from a joint venture standpoint. You're kind of the money guy. Yeah, I call you the money guy, money bags. Andy's money bags, by the way, guys. If you need someone for you to.
Right.
What do you look for in a jockey? What's important for you in a partner? when you're going to be joint venturing, that's, hey, here are the things, like what did Derek show or provide, or what was it about Derek that you said, this is a guy I want to align myself and my company with in order to grow?
Yeah, it's part of it's instinctual, but we do have kind of a criteria that we sit them through. So we've got to walk through the process from A to Z, right? Like, how are you starting these projects? How are you completing these projects? How are you reporting on these projects? We've got to see the track record. So maybe we'll walk through some specific deals. And then, Ellis, you and I have talked about this quite a bit. Like, I want to hear somebody that's been leveled and with the description of how they were able to right that ship. Now, I don't mean that they need to be knocked on their A and completely level, but I mean that there's not one deal that I've ever been in that doesn't have something that goes wrong. And so when you're looking at a partner, you need to know that they're resilient, right? I always tell people that we partner with, or people that we're, helping as mentoring, that I don't know what's going to go wrong, but there's going to be something that's going to go wrong in this deal. And that could be with the lending. It could be with the getting the capital together. It could be with the construction schedule. It could be with lumber prices. There's going to be something that goes wrong, and we're going to have to be aligned with people that are resilient. So those are just a couple of the things.
That's really good.
Yeah.
Derek, welcome to the conversation, brother.
Yep, glad to be here, guys.
And by the way, Derek's going to be try to be humble, and he's not going to say a whole lot. So I might have to be his hype man a little bit when he gives us some kind of dry answer, like, oh, well, shucks, it's just everybody else that's doing all
Derek is an Amazon author. Like, he just published 2 children books on top of building a $50 million fund. So what are your books on Amazon called, Derek? What are they?
Dino Builders.
Huh?
Dino Builders.
Dino Builders. But guys, go get this. If you want your kids to know about construction entrepreneurship, they're $10. Go support my man Derek.
My nephew knows more about dinosaurs than me. He loves that book, man. It's amazing.
Yeah, fun stuff. So Derek, so you're on the other side. I think this is really cool, helpful for our audience. You're on the operating, like, really, you're not, capital raising has not been your strength. You're a developer. You're a general contractor by trade. Is that correct?
Correct. And I'm glad Andy described me as a jockey and not the horse. I've always been on the side. I've been doing it solo more or less for almost 20 years, and doing 2, 3, 8 projects a year. And I was 100% partner doing everything. And like you were describing earlier, it's nice having that 100% ownership, but it slows you down. And through joining this group, I just realized, met up with Andy, and he would call me kind of asking, like, what I have going on, this and that. And I was like, well, I have this thing I'm working on. It might take me 2 or 3 years. And then eventually it just morphed into something else. Like, well, we could take this and do something much more efficient, do it better, carve out the pieces that I don't normally do. Like you said, the fund, the capital raising, the asset management, that's just not me.
So Derek, talk to me about, let's talk about joint venture, and then we'll dive into the fund itself. And you don't necessarily have to give here live unless you guys want to numbers to the breakdown. But talk to me about how you decided to break it down in terms of, because you never had done partner or joint venture like this, and you've given up a percentage or a piece of your company to Andy and his team. How did you kind of figure out how the best way to do that? What you guys would focus on, like who would do what roles? From coming from, I've done this by myself, to know I'm actually going to bring someone into my, my team and start carving out equity. Was that a hard process? And then tell me how you kind of did that and how that might be helpful for people who are listening.
Yeah, I think Andy's going to have to answer half of this as well, because it wasn't a set process. It was like he was talking about through the interview, just the process of meeting each other. I mean, we probably did it over 4 or 5 months of just meeting him, his other partners, and slowly just going through that process of learning each other, learning what they do and what I would do. And it just kind of naturally started to fit into place to see, okay, this is where we could end up, and it makes sense for both sides.
Ellis, as you know, there's just so many components of it, right? The development's a huge, huge piece. But if you've got a developer that's actually out there also trying to raise money and is trying to, manage the asset, all of that, manage the investor relations, all of those pieces, the legal, all of those things, they require a lot of time. So we really envision this as being a true partnership. This isn't just, we don't think of ourselves as money raisers in this case. We think of ourselves as
Yeah.
kind of the asset management arm. So we'll be doing a little bit more there. But again, Derek had a project in this particular case that there's no reason he couldn't have done it by himself, right? What we're looking to do is help grow this fund in the long term with like assets like this. So we're going to need a lot of help on the acquisition process, on the land process, on learning new markets, figuring out how this Southeast is run with its particular municipality. So there's a lot of those kind of back office pieces that, as people that are in real estate know, there's just so many components.
Yeah. You know what I love about that too, Andy? And I think about like when I think about how to really grow and grow big and do something impactful, like I think what keeps a lot of people from even wanting to think big, and I'm guilty of this sometimes too, is the bigger I think and I'm like, oh, that was a good idea. And then like I get really excited about it. And then I let it try and simmer a little bit. And then the first thing I start thinking of is all the problems.
Yeah.
Oh man, if I do that, I don't know how to do that. Well, dang, if we try and do that, then who's going to do this? And I think the problems of like, I don't know how to do that keep people from really pushing through that ceiling. And that's why I like the, tagline to our mastermind is you're one connection away, because I think there's always a who to help solve that problem. Right. And so even what you're saying, Andy, is like you were that who for Derek. But I love what you're saying too, is you're going to need more who's. Like in order to accomplish what you guys are going to need to do, you need more who's to help with some of these things that you guys don't even know how to do yet. I love that.
Absolutely, man. When I was coming up, one thing that might help people that are out there that are either looking to JV or, they're kind of, hey, I don't understand, if they might have to defer to this guy or that guy. Like everybody has a skill set. Like if you come in and you said, look, I've just got a marketing background, Ellis will tell you like our marketing is definitely not where it should be, right? So we've been doing these deals for 20 years. We've got some of these pieces on the processes and investor relations, and we're able to cycle through a lot of the investors we had. But somebody that could come in and help us with marketing, like there's a huge draw there, right? There's just all these different pieces. And the other thing is trust your instincts. Like a lot of times when I was starting out, I would go to a senior developer or somebody else and I would think, oh, these guys just know so much more about this thing than I do because they knew development. And that's just absolutely not true. There's just so many nuanced pieces that if you've got all this experience that you can bring to the table, you can help somebody way smarter than you grow because you haven't bought into this idea, well, they must know all the nuanced information. The hardest decisions that you make, I think, along the way, Ellis, are like you understand something, you're maybe 55, 60% sure, but your team who doesn't have all the information is like 80% sure. Like that's when you're really tested, right? So you really got to trust that this special thing and you can bring that to the table and don't defer to people that don't.
Yeah, that's excellent. Derek, so while we got just a few minutes here, tell us about this fund and the actual project and what you guys are out to accomplish, because I think it's pretty massive. It's pretty cool.
Yeah, it's a 506c, so we can talk about it. We don't have to, tread lightly. And the model is just to focus on 75 to 150 unit single family residential subdivisions that we're going to manage like multifamily assets. So we're going to own it just like you would an apartment building, but they're just individual homes in a single community, but it gives people a little more space. They have their own driveway, their own front and back porch. So people that are ready to move out of traditional apartments or people that are downsizing from their houses, we're capturing both of those segments. And we're looking to do it everywhere from Texas all the way to eventually North Carolina. That's kind of our sweet spot. We're going to fan out. I'm in Louisiana, so the first one's here, and then the next ones will be a couple hours from there as we grow it.
And when does this fund open?
Oh, Andy can answer a little bit better, but probably 2 weeks.
Yeah, we're pretty close. We got a lot of the kind of, as with many of these things, Ellis, like you can get 90% there with something, and then like getting that last 10%, which is why it's so important to have a great team. You got to push and push and push and push. So I think we're pretty close there. But we've already actually started on the building and the project. All that stuff makes sense now for this first one.
By the way, guys, and we don't have all day with these folks, so if you have specific questions for Andy or Derek, please type in the chat while we do that. Guys, Where if someone's listening, want to learn about you guys or this fund, what's the best place to go to in order to do that?
Yeah. Hop on. We got a couple of resources there on legacyax.com, www.legacyax.com. We got some passive investor resources. We also got some kind of how to sniff out the BS when you're looking for deals. And then I'm on LinkedIn, all over LinkedIn. And then Derek just got me in Clubhouse, Ellis. So
I
I don't
saw
know.
that, man. You guys were
This
late
be-
night.
this
It's
might
like 8
become an
o'clock my time. You
addiction,
guys are
man.
on
I don't know.
Clubhouse.
This could be bad for me. This could be bad for me.
Man, that's awesome. I'm seriously, and I was just, Andy, Derek and I were speaking this morning. Not, man, it's amazing. For anyone who's listening, I mean, seriously, Derek, let's end here. When we met, what, a year ago? How long you been in the mastermind now? Just about a year or so, coming up on a year. A year ago when we met, we both said, "Hey, man, I'm not quite sure, if what's going to come out of this, but I think you should be a part of this community because of who's in it, and there was something there." Like, talk about the power of a connect. Like, just for anyone who's listening, who maybe is kind of where you were a year ago, like, what advice would you give them if their goal is to maybe accomplish something bigger? Like, what changed for you? What was the key to finding a guy like Andy accomplishing something that maybe you didn't think was possible for 2 more years? What word would you say?
Well, yeah, I think it's just getting in those rooms with other people who are ambitious and more specifically, even more successful in what they're trying to do, because it could inspire you and give you the confidence saying, look, these folks are just like me, and they're trying to do the same things as me, so you get to learn from them. And it's kind of the birds of a feather flock together, and so you just start to build those relationships and realize I really can do this, because everyone else here is. I just have to figure out a way, find your special talent, what you can really contribute the most, and focus on that thing. You don't have to worry about everything else. Other pieces fall into place.
Yeah, I love that, man. Andy, anything you would add to that? I want to pull up a video. I'm not going to show it, but I want people to see it of Derek later. So anything else you would add to
No,
that,
I
Andy?
just want to, I really want people to kind of hone in on what Derek said there, which was like, there's people just like me, right? Like Derek listens to me. He's like, he's been doing this for 20 years. Come on, man. And there's like tons of blind spots that he got. So that's what I mean. Like these holes that we can fill. And if people just kind of come in with, hey, look, you've put in a lot of hours in marketing or raising money or finding deals. There's a place for you. So that I just hope that people will reach out. And I'd love to talk to them more about it.
Yeah. So legacyax.com, right, Andy?
Yeah, that's right.
And both these guys are on LinkedIn. They're also part of our mastermind. And so, man, these guys are just becoming really dear friends. So grateful to have both of you on here. And really, man, can't wait to see you guys just skyrocket. And really, I think what's cool about your fund is that it's different, especially in our market and our industry. And I think it's going to really attract a lot of people to what you guys are doing, and you're doing it the right way. You're really coming with it with a mindset of, I really want to help those in the communities that we're developing. So, man, I'm all for it, and I can't wait to give as much fuel to it as possible.